Welcome to Get Serious. We're at Serious Land Capital. We have successfully funded over $6 million of land deals with industry-leading 41% operating margins. So today I wanted to chat more about kind of the future outlook on some of the partnership structures that we've started to explore more recently and are starting to shape up over the course of 2026. We'll see what comes to pass, but some really interesting conversations recently here. So I think I'd remarked on a pod the other week that after we adjusted our Hormozy ACQ AI to really figure out our core constraints, it's like, yeah, leads. Got to get more outbound out to higher quality and more established operators and try to build more of these longer term relationships, less of a volume game, and going just after higher quality assets, higher capital outflows accordingly here. And we had a number of these colleagues and operators sidelined previously because we were sorting out kind of continued track record over the course of the last year in the midst of, again, a dangerous buyer's market, to say the least, prior to over levering ourselves and committing more capital than we expected. But based on some conversations we've been having both on the capital side and the operator side more recently, it's allowed us to start to accelerate our anticipated growth as a company and the types of deals that we're willing to do. Whereas previously, that kind of minimum 50K purchase price, which is still the case at the moment, but we prefer 150K plus, but largely capping out around the $500,000 purchase price range, more or less. Now we're more open to doing double that, or closer into the smaller 7-figure purchase price type of properties and projects that by their nature tend to introduce more complexity, notwithstanding the extra capital requirements. But yeah, I mean, also are just going to have increased timelines on average, and just going to need require or are going to need to require more capital to fund these deals than we might have internally as management equity here. So with all of this in mind here, again, based on some of these conversations that we're having, it's starting to make more sense where, traditionally what we had done for deals that were a bit larger and, we wanted to distribute the risk across more investors than just ourselves internally. We would bring on outside investors with equity or capital in the form of equity, and we would just form a separate LLC in the form of a special purpose vehicle or an SPV, and let that be the effectively the entity that's housing that particular asset and that investment, but not going after or not having pooled capital to go after different assets that might be available here. It was a single raise targeted for single asset, and then distributions accordingly upon realization of anticipated profits from those assets. So that's kind of the simple plan there. But the next stage is like, do we look at what a fund setup might be? That word gets thrown around a lot here. But the thing is, as with everything, like, it's important to actually, utilize the same definitions and explanations for each word, so everybody, that's a part of the conversation is on the same page. And the thing with funds, my core business partner works at a large hedge fund, and what a true fund setup is, with all these various SEC regulations and so forth, and investor requirements, like, they typically don't make sense to set up, both from a risk standpoint as well as just a cost standpoint, unless you're at $100 million minimum of capital collected for the purpose of investing via a fund. So there's a lot more particulars to that. So we just like to put that definition out for what a true fund would look like from an institutional perspective, which I tend to think is the better route to go when we're laying down financial definitions. And so anything below that, might have the, at first blush, kind of look like a fund. but in reality, it's just what you could call a larger SPV, special purpose vehicle, or a larger JV, joint venture, is what the more appropriate definition would be, but still allows you to pool capital together to go after multiple assets, similar to how a fund setup would look like. So, I like to throw that out there just again, so we're working from the same definition together here. And in this case, what has become very interesting here from some of these conversations is looking at some of these operators who are you know starting to get throughput of $1 million in contracts to land deals under contract, not money deployed yet, it's not closed, but under contract on a near weekly basis. And then we have these external capital partners who have experience within the landfill and industry over a multi-decade period of time, some more than others. Some are sitting on significant liquidity and are comfortable investing into real estate assets. And so it's like, okay, how do we start matching up these higher level operators with the external capital here, and then position ourselves as Serious Land Capital as kind of this central node. That's what I might have remarked before, but I keep kind of coming back to this as what's our zone of genius here, and it's really serving as that bridge point between significant institutional capital or significant capital sources that trust our ability to underwrite alternative assets, and land certainly is alternative, and underwrite operators who can bring quality deals to the table and kind of serve as that bridge. So not many folks can do that well here. And oftentimes, like, you'll want to typically either manage investors for the most part, or manage assets for the most part. Trying to do both is from what I hear, for people who've done this a long time, like, that's a very difficult pathway to walk. And I think longer term will probably settle into more of the investor manager side of things, and just understand, like, our ability to underwrite deals, like that's just core to our identity. But ultimately, if we calibrate enough with operators we develop a relationship with, and understand that their selection criteria for how they're underwriting assets and managing them is aligned with us, then we can shift more from being as deep in the weeds from the asset management side of things, and just continue to nurture and bring in more capital in order to match it with those particular assets. That's where I see this starting to go, medium to longer term here. And what that looks like logistically, not too concerned from the paperwork perspective. Of a number of folks I can call on that have done these type of things before. And to me, the biggest piece to sort out is because if we do a fund setup, it's not clear whether we would just work with one operator. I don't think that might be the case. If I were to throw out a hypothesis there, I think if we have kind of a range of assets, particular operators bringing in certain type of deals and other ones bringing in different deals with perhaps different levels of risk, timeline, geography, etc. And so we have kind of a blended pool, all of which we feel comfortable investing in, but it also gives us a diversity across different operating teams and timelines and geographies, like I mentioned, matching it up with this pool of capital, and to kind of fully understand, okay, how do we match this up in terms of total number of deals that we might expect across all operators that we're working with on a roughly quarterly basis, maybe every couple quarters, into how much capital we might need to deploy within that period of time. That is kind of the big piece that I want to line up over probably the first half of this year, as soon as possible is ideal here. And those conversations are happening on a daily basis, but we also have to make sure that we're calibrated well with those operators on the asset management side, because it's like, okay, I might have 1 million or so of deals coming in on a monthly basis, but we only prefer from a risk standpoint, like half of those or maybe a little bit less. We have to start figuring out, okay, what's actually going to fit more reliably before we can kind of commit to, all right, this is a proper amount of deals that we can reliably say is going to be coming in on this particular period of time. So we need this amount of capital to be able to put to work across this number of assets. So that is what I'm trying to bridge here. Of course, the first steps always is trying to figure out the execution pathway on both sides, like do a test deal, a one-off deal. It doesn't even necessarily need to come all the way to fruition, but can you get, the capital into a particular deal, which is, one of the hardest things to do anyway. So people can talk a big game or say, yeah, they're willing to invest, but when it comes to actually wiring the money, we all know that's the hardest part to get done. Can we set up a particular deal and maybe have underwriting happen on both sides, the capital as well as the operator side, and start to figure out how do we actually work well within a smaller partnership structure here before potentially trying to do something longer term or larger. So that is kind of our multi-step game plan that we're trying to accomplish here. Again, a lot of folks could work a play like this. I think it's simple in my ability to speak about it in like 10 minutes or something, but in terms of actually executing and having the relationships that allow this to come to fruition is a multi-year process. Like we would not have been able to do this when we first got into the business. Like we had to build up a reliable track record and brand recognition and so forth, as well as just a capital base to work from, which just takes time of doing this day in, day out, and doing the thousands of reps necessary to properly underwrite deals and feel comfortable writing checks or more. Again, there's only a handful of folks in this space that are willing and able to do something like that. So, but if you want to play at the highest levels, that's what it takes. So just to share what we're trying to do, and if some of this resonates, both from the capital side or the operator side, and you'd like to share in this vision with us, we're not greedy about particular capabilities, and like building a gated infrastructure. Like you can see how much content we put out. We share all of this for what we're doing here. So again, real estate is literally the biggest asset class out there. No one can do it. It's not a zero-sum game. No one can do it but by themselves here. So to us, it's all about creating larger pies and sharing in smaller slices for each particular entity or each player within it, but the absolute values continue to get larger and larger. The more high-level folks that we can do that with in this particular industry, the more the merrier in that case. So if this resonates, please reach out. We'd love to have a conversation. That is my number one focus on at the company right now. SeriousLand.capital for any of your land funding needs. Subscribe and share, everybody. Looking forward to next time. Take care now. Bye.